What we've seen really since the GFC is increased regulatory pressure, increased cost of capital pressures on the banks, and as a result of that they have withdrawn or reduced their lending activity in certain parts of the market. The two key drivers of credit growth and demand for our business are predominantly from M&A, event-driven acquisition financing, and also from commercial real estate related lending activity, a lot of private development transactions, for instance, in the property industry. Private debt in a rising rate environment, it should be protective of investor interests. And the reason I say that is that most of the underlying loan assets, for instance, that are held in our portfolios are based off a floating rate. And so if interest rates were to rise, then the investor's total return would increase. Obviously, in a rising rate environment, interest rates are rising to effectively control or reduce economic activity or to dampen inflationary pressures. Again, floating rates, private debt provide a hedge against that inflationary pressure as a result of the upward bias or upward movement in interest rates. You know, there are investors that very much as a result of interest rates reducing are looking for more of a conservative option, and so they flow into our MXT vehicle, or they're in the wholesale funds, they go into our diversified fund or our secured private debt fund. We also have investors that actually want industry exposure, and so we offer a real estate lending fund where investors that invest in that fund purely get the benefit of debt, the income that is being generated from our activities where we lend to commercial real estate participants, market participants. So it's really across the spectrum, and what we've really tried to do is be very agnostic about what an investor's choice should be. At the end of it, we originate and are active in the market looking to find opportunities to lend and provide financing to companies. But what we've done for investors is we've segmented that risk, return and liquidity into different funds. And so when we seek to provide an opportunity or to negotiate a transaction with a company, what we're looking to do is then ensure that that loan that we're making to the company also meets the mandate criteria of our respective funds.